Certainly. The question of whether cryptocurrencies will replace local currencies in the future is a complex and highly debated topic. Let's explore it in more detail. Advantages of cryptocurrencies. Proponents of cryptocurrencies argue that they offer several advantages over traditional local currencies. These advantages include decentralization, security, transparency, lower transaction fees, faster cross-border transfers, and potential protection against inflation. These features make cryptocurrencies attractive to certain user segments, particularly those seeking more financial autonomy and privacy. Potential use cases. Cryptocurrencies have the potential to revolutionize various industries, such as finance, supply chain, healthcare, and real estate. For example, blockchain-based systems could streamline cross-border trade and reduce paperwork, enhancing global commerce. Smart contracts could automate agreements and eliminate intermediaries in various business transactions. Financial inclusion. Cryptocurrencies can play a role in providing financial services to unbanked or underbanked populations. With internet access and a smartphone, individuals can access cryptocurrencies and engage in financial activities without the need for traditional bank accounts. Central bank digital currencies. CBDCs. Some countries are exploring the concept of issuing central bank digital currencies, CBDCs. Unlike decentralized cryptocurrencies, CBDCs are issued and regulated by central banks, offering the benefits of digital transactions while maintaining government control over the currency. CBDCs could potentially coexist with local currencies and traditional financial systems. Challenges and risks. There are significant challenges to widespread adoption of cryptocurrencies as a replacement for local currencies. One of the main obstacles is the current lack of regulatory clarity and varying legal stances worldwide. Governments may be cautious about adopting decentralized currencies due to concerns over financial stability, monetary policy control, tax evasion, money laundering, and illicit activities. Volatility and stability. The extreme price volatility of cryptocurrencies, especially during market fluctuations, can deter their use as a stable medium of exchange for everyday transactions. Local currencies, backed by central banks, are generally more stable and provide greater predictability for economic activities. Public perception. Cryptocurrencies still face skepticism and misunderstanding from the general public. For cryptocurrencies to replace local currencies, they need to gain widespread trust, understanding, and acceptance, which could take time and educational efforts. In conclusion, while cryptocurrencies have the potential to disrupt traditional financial systems and offer numerous benefits, their widespread adoption as a complete replacement for local currencies is uncertain. The path forward will depend on various factors, including technological advancements, regulatory developments, public perception, and the willingness of governments and central banks to embrace digital currencies. In the foreseeable future, it is more likely that cryptocurrencies will coexist with local currencies, each serving different purposes and catering to different user preferences. Subscribe the channel for more exciting content.